Hey, everybody. Good morning. Welcome to Ankerstar Wealth Monday morning. We're with you bright and early. Have three topics for you today. You know, on Friday, we hit all-time highs, high fives on Dow 40,000, S&P, all of that stuff. That's good news. Today is kind of muted at the open, but we'll see how it goes. Generally, the sugar rush that hits new highs means you're going to make more new highs, but certainly there are some key earnings this week that we will get to as one of our topics. But first topic, I will go first today because you know what? I'm just taking a huge victory lap. You may hear it in my voice, but I literally feel like running around the office going woo and then claiming victory because the CEO of Grayscale stepped down to pursue other interests. Obviously, that's been a debacle since January 11th. I'm surprised he made it this long. But anyhow, I'll peel that back for you on what I think happened. Of course, everything in the press is so nice. And yes, thank him for his service and all that stuff. I've been around long enough to know when somebody's getting fired. So I'll cover that. And then Mike is going to switch to a Wall Street Journal he came across that talks about money angst. Ever have any money angst in your life? Most people do, right? So it talks in there about the need for a financial therapist. And I will say it, when we're at events every now and then, you're meeting people for the first time. That is one of my favorite things to say is, people are like, what do you do? And I'm like, oh, I'm a therapist. Which generally, you say you're a financial advisor and they leave the room, right? And you say you're a therapist, people are like, oh, what kind of therapy? Yeah, they're all interested then. So yeah, we'll talk about financial therapy and when you need it. And I'd say we all need it on occasion. And then last one, we started talking about major earnings this week. Well, one of the bigger names in cybersecurity and one of my absolute favorites of all time, I had this stock over a decade ago. Still don't know why it's not in my portfolio, but I thought better of it at some point in time, so it's not there now. But that's Palo Alto Networks. They've been a leader in the space. We have them today. Mike's going to talk about that name and how, it's going to move a lot of other names we're in that are a lot smaller. And then, of course, we have NVIDIA coming out Wednesday, which pretty much is everybody's going to talk about that all week long. But we won't talk about it yet. We'll save that for another show. Before we get started, this financial education presentation, you have to do all your own due diligence for acting upon anything you hear in this presentation. More disclaimer information is available at ankerstarwealth.com. And the opinions expressed today are Mike and mine alone, especially my opinion on what went down at Grayscale. Here's the article from this morning. There is the gentleman in question, Michael. Looks like Sun and Shine, close to Sun and Shine. Anyway, but yeah, he stepped down. Okay, Goldman exec to take his place. I don't even know who that is. But yeah, so let's talk. Oh, Peter Mintzberg coming head of strategy for the asset and wealth management division. Well, so let's kind of, and it talked in here about here's your, to pursue other interests. Now, I have no doubt that this gentleman obviously he's been in the chair for 10 years. So, I mean, I don't mean to crap on him too bad. A little bit, but not too bad, right? Being built to the market leader over the course of a 10-year period. And then, of course, January 11th, which may turn into like a little mini national holiday, was when the Bitcoin ETFs were finally approved for trading. GBTC, which is the Grayscale version, said, you know what? I think the free world will pay us 1.5% when all other 10 went lower. How much lower, you ask? Yes, good question, 0.2%. So Grayscale charging 1.5, BITB and a couple others down at 0.2. There is a 0.19 player out there now from Franklin Templeton. But when you look at you've heard us talk about several times in managing this, we were in MicroStrategy, went out of that because we thought it was at a premium, went into GBTC shortly, and then switched to the low-cost leader out there with Bitwise, and we're very happy we did. However, so this was an article that talked about the first day of trading back in January 11th. Now, since this, immediately Bitcoin, not immediately, but pretty much a steady march higher in Bitcoin during this time. But all kinds of trading went down. And the question was, why is Grayscale maintaining their 1.5%? So, it was initially they said, we're the experts, right? We know how to hold crypto, so you'd be crazy to go with anybody else. Well, I don't think these firms would have gotten approved by the SEC if they didn't really understand how to hold crypto, right? And I was fortunate enough to sit with the CIO of Bitwise, Matt Hogan, and he explained to me exactly how these are held in cold wallets and safe and okay, it's like he reached my limit of understanding of how all that works, but it made me feel safe and have no problem investing. And we have, $5 million in the book with them. of everybody's money. So there's no doubt that that we're safe there. That same trip, I talked to a C-suite exec from Grayscale, and I said, hey, and this was back in late March, and I said, hey, what's the latest on dropping your fee? And he goes, that's something we're taking a look at. So I don't know if you've seen movies like The Big Short or Margin Call. If you haven't and you're a financial junkie, watch them tonight because they're fantastic. But if you remember in Margin Call, when the housing market's about to implode, and one of the teams discovered that and brought it into the C-suite, they held like a 3 a.m. all hands on deck conference of what to do at the open. That's the sort of situation that probably should have gone down here, not just sleep through it and talk about it, and 2 months later, it's something we're going to take a look at. As the number that's shocking to me, here's your Franklin Templeton at 0.19. Let's see. Oh, I had it, but now I don't actually see it. It was 300. Oh, here it is. This line right here. Grayscale has lost 350,000 Bitcoin in outflows since launching, and they need to plug the leak. Okay, hey kids, first of all, what's that in dollars? I ran it out. It's like 21 billion and change. Significant, right? I would call that a lot of money. I think you could lose 1,000 Bitcoin and want to plug the leak, let alone run that back 314 more times before you go, there's something to this plug in the leak thing. So anyhow, they kind of get what they deserve. However, they have come in with this Grayscale mini Bitcoin ETF. And if you remember, this is literally the last article you can find on it is April 21st, which is not yesterday. That's a month ago. They said they're coming out with this mini Bitcoin ETF that has a 0.15% fee. What? I don't know. I don't know what that is. I'm trying to figure it out. If you Google search it, you can't find anything. So it's probably just a bunch of nonsense. So I don't know. I don't want many Bitcoins. I want actual Bitcoins, please. So that's enough. All I have of crapping on Grayscale. CEO is out. New exec from Goldman's in. Goldman has been one of those folks that has done pretty well over the years. So we will see what happens there. All right. If that caused you some angst of maybe you were holding GBTC with all these outflows, well, I don't know. We'll turn it over to Mike so he can talk about financial angst and financial therapy.
All right. Well, Steve, I thought I'd start off by showing a lot of green because that always removes angst, at least for me. And while you may say stocks are flat with the Dow, the Nasdaq's up 0.67%. And since we are high tech holders, that's not flat. That's very good. That's up, up, up. We love that. So, but now we'll get into the angst, the financial therapy. So money troubles, you might consider a financial therapist. Yes, there are actual financial therapists out there. When you consider money is a top discussion point within marriages and for life, I thought, wow, actually therapists that talk about money that aren't us, that aren't actually holding your investments. And believe it or not, I think they get paid hundreds of dollars an hour. So that's great. But let's look at the factors taking a toll on people's mental health. Number one, money, 52%. Their own health, 42%. Current events, we don't like that one, 41%. Health of family and friends, slightly down on number 4. Relationships and work, let's drop all those down further. But money, number 1. So continuing on with that, and I thought this was interesting. In last year, 52% of people said money negatively affected their mental health. So, I pull out the negative side because the stock market was up 24%. I guess you could overspend, but at least on the investing side, if you are in normal investments, if you're working with Ankerstar Wealth, it shouldn't have negatively affected your mental health. So that these were not a survey of our team, so our survey of our clients. I'm sure it'd be much, much lower. And then I thought this was very interesting. I'm scrolling down here fast. The main concerns among people who say money has affected their health. So let's look at what those are. Inflation and rising prices. And I know, hey, we do invest in Meta. I see on Facebook all the time people forwarding around, here's the prices from 4 years ago to now. And, and sometimes I see misinformation out there. So I never respond to it because I just don't feel like playing that, but inflation clearly has went up. You just gotta have to manage that, paying everyday expenses, and I do believe that we're starting to see that some of the money in the mailbox that came during the COVID year has finally run out, and people are starting to hit against their own paycheck. So that I definitely could see how that would be a negative. Not having enough emergency savings. Yes, if you're living paycheck to paycheck, and any kind of a emergency $1,000 expense puts you cashing out retirement accounts, that would be stressful, and several others. I'm surprised paying for housing was down as far as it is. It's down a number at 42%. But look at this. Maybe they did survey our people. Being unprepared for retirement, that's very low. We want to keep that one very, very low for you. So anyways, somewhere in the, oh, there it is in the article. This financial therapy fees range from $125 to $350 an hour. So wow. So maybe call somebody on our team. We will not charge you $350 an hour to talk about your finances. But hey, talk to us. Well, at least we'll get your investment side all set for you. And then, so what I want to move us towards is earnings. So things that cause, I won't say this causes us stress. It really does not, but it certainly is interesting. And this week, later today, Palo Alto comes out with earnings, and you can see I'm showing the 6-month graph because I want to show you what happened the last time they came out with earnings about 3 months ago. And you just can get a perspective of that. You see that big drop. If you were in Palo Alto, which we were not, thank goodness, you suffered that big drop. And then correspondingly, we have large positions, or we have positions in CrowdStrike and SentinelOne, which are competitors of Palo Alto. On the day that Palo Alto dropped like that, we saw ours go down as well. But when CrowdStrike came out and beat earnings later in the week, it shot back up. So, we certainly see, similar positions kind of bleed over into each other. So do we want Palo Alto to go up? Absolutely. Let it go up. Let's go up and take ours up with it. And then the other one, the big news, mark it on your calendar for Wednesday, NVIDIA. Already up 2% today, almost trading at its all-time high. It's only about $20 a share. Now, when they came out with earnings, which it felt like there was no way they could impress us with earnings 3 months ago, they did. And since then, it's really kind of traded flat. I'll bring up. Here's a year-to-date look. It's kind of traded flat. Now, this one will be very interesting because if they impress us with their earnings this Wednesday, I would expect the market to scream higher. If they come out and say, hey, things are slowing down, the market could go lower. So and along with all the chip manufacturers as well. So it's just interesting to see these. You may say, hey, wait, I don't hold NVIDIA. If you see JTEK, JTEK in your portfolio, JTEK is our tech fund. NVIDIA is their number one holding. Meta is their number two. So you do have an interest in this. So with that, green. Let's keep it going. It's summertime in Ohio. It's nice out. Let's just have a great green summer.
All right, I like it. Good report on there for tech, and you're right. Earnings this week, NVIDIA is going to be a market mover. When we talk about, would you buy in here? Absolutely not. I wouldn't buy in there, right? Risk reward. You can get a little bit of upside or maybe a lot of downside if they miss earnings. So even Kramer was talking about this morning. It's like if you want to mess with NVIDIA, just go ahead and wait till after earnings, see what you have on your hand, and make your decisions from there. So, and hopefully you don't get financial angst out of it, whether it's FOMO or I don't even want to go down the laundry list we talked about on Friday. But JOMO, there you go, or YOLO, as my kids like to say. So, all right, that's all I've got for you today. Hope you enjoyed it. We will see you back tomorrow morning. You have a good one. Bye.